All right, we are live. Just waiting for the rest to join in. Hi, everybody. Welcome in for today's webinar session. All right, we'll just wait for the rest to join in as well. Okay. Today will be a very interesting webinar session. All right, we'll be moving towards more on technical basis. So if you guys can hear me clear and loud, loud and clear, just let me know. Just drop it in the chat box. So just to check on the sound check. All right, cool. Thank you. Thank you for the response. All right, so we will just wait for the rest to join in. We can kickstart probably in a 5 minutes time. All right, just give them chance to join in as well. And today we have a very special guest speaker. Let everybody in. Once we are ready to start, I will intro you the guest speaker. All right, and the normal price update, and our guest speaker will take the floor and explain to you guys on what is technical charting all about. So while waiting, let me just play you guys some music. Just to cut the bottom. Club is the best place to find the lovers, so the bar is where I go. Me and my friends at the table doing shots, drinking bars, and we talk slow. Come over and start up a conversation with just me, and trust me, I'll give it a chance. Now take my hand, stop, and the man on the jukebox, and then we start to dance. And I'm singing like, girl, you know I want your love. Your love was handmade for somebody like me. Come on now, follow my lead. I may be crazy, don't mind me. Say, boy, let's not talk too much. Grab on my waist and put that body on me. Come on. All right. While waiting, because since today is all about technical charting, right? I hope you guys have your pen and paper ready to take down important notes and how to basically understand technical charts. Okay. Yeah, we have people coming in still. Now follow my lead. Come on now, follow my lead. I'm in love with the shape of it. Push and pull like a magnet. Although my heart is falling too. I'm in love with your body. Last night you were in my room. Now my bedsheets smell like you. Every day discovering something brand new. I'm in love with your body. I'm in love with your body. I'm in love with your body. All right, so let's give the rest up to 8:35. So that's around a couple of minutes time. So yep, we will start sharp 8:35, and hope you guys will have a very good
session today.
When we came, we let the story begin. We're going out on our first date. You and me are thrifty, so go all you can eat. Fill up your bag and I feel like a plate. We talk for hours and hours about the sweet and the sour and how your family's doing okay. And leaving it in a taxi, kissing the backseat, tell the driver make the radio play. And I'm singing like, girl, you know I want your love. Your love was handmade for somebody like me. Come on now, follow my lead. I may be crazy, don't mind me. Say, boy, let's not talk too much. Grab on my waist and put that body on me. Come on now, follow my lead. Come on now. Now follow my lead. I'm in love with your sweet body. Push and pull like a magnet. But when my heart is falling too, I'm in love with your body. Last night you were in my room. Now my bedsheets smell like you. Every day discovering something brand new. I'm in love with your body. I'm in love with your body. I'm in love with your body.
All right, so okay, probably we can kickstart now. Okay, the rest will just join in later, I believe. No worries about that. Okay, so yeah, today topic will be about understanding technical chart 101. So basically, it's about what are the key indicators and how do we implement it in our technical chart, which is TradingView, which is available in our trading platform. Okay, and for you guys who have not followed our social media, please do so. We are in Facebook, we are in Twitter, we are in Instagram, we are in LinkedIn. We are also just launched our YouTube channel. We will basically promote our YouTube channel as well. So yeah, we have a lot of exciting programs ahead for you guys. As I always mention in this webinar session, it's a Malaysia trading platform provided for Malaysian. So yeah, guys, we will start now. Okay. Today, before I intro before I intro our guest speaker today, all right. So let me just go through with you guys on the price updates. Okay, the usual price updates. So yeah, what's happening with digital asset? Basically, Bitcoin, Ethereum, and Ripple is basically on the downside for today after the exciting rally. All right. So if you guys can see in the screen, Bitcoin is doing 9517.4 in US dollar. So in Ringgit Malaysia, in our trading platform is 40,000. Day to day is down by 6.18%. Ethereum 236.95. In Ringgit Malaysia, and on our trading platform, it's trading at 1027, so which is down by 4.3%. So on Ripple, in US dollar, it's 0.20275. On our trading platform, it's trading at 0.8729. Okay, so you guys might be wondering, with all this price, volatility and what's happening in the market. So how do we predict, or how do we look at the technical chart to assist on our investment, in our investment decision? So today, I have a very knowledgeable, a very distinguished guest speaker, Mr. Nick Asan. All right, he's with us today. So you guys are very privileged to have him on board as a guest speaker today, to basically go through with you guys what is technical chart all about. So before I pass the slides to Mr. Nick Asan, so let me just go through with you guys a brief introduction about Encik Nick Asan. So basically, Encik Nick Asan is a senior chartist for research Maybank Kim Eng. He is certified technical analyst and has been recognized by both UK Society of Technical Analysts as well as International Federation of Technical Analysts, IFTA. He has over a decade of experience as traders, futures broker, equity dealer, investment analyst, and applies his skill trading various asset class, including stocks, derivative, commodities, forex, and options. Okay. Currently, Mr. Nick Ehsan is among a very small number in the world who have acquired the highest pedigree of distinction for MSTA program and currently lectures pre-Bumi Mata and UK Society of Technical Analysts. Okay, Mr. Nick Ehsan also served as a conference director for highly successful IFTA conference 2018. He is the former president for Malaysian Association of Technical Analysts, MATA, and currently serving as a board of director for International Federation of Technical Analysts. So if you guys can see the distinguished portfolio he has, you guys must be very privileged to have him on board today. So Encik Nick Ehsan, the floor is yours the floor is yours, Encik Nick.
All right. Hello, everyone. Can you guys see me? Give me a second. All right. Hello. Okay. Thank you very much. Thank you very much, Mr. Ren, for inviting me for this program. Actually, it is my honor for today. I would like to discuss a little bit about technical. It is I pretty much what we call that technical enthusiasm. I really like technical, practice technical, doing technical, and everything related about technical analysis. I actually really go into that. And for today's session, it will be very easy. I'm going to walk you through few of the indicator I'm using, few technique, strategy, and of course we're going to do some of the outlook for Bitcoin, Ethereum, and also Ripple. Now, the session today, I like if you can ask any question right away. If you not understand, if I'm drawing any chart you're not familiar with, and we can just what we call that, you can just shoot the question anytime. Now, I'm going to use what we call that, something that we call a very simple what we call that tool, which or platform which called TradingView. TradingView is actually a free platform. I have it here, so I'm going to change the screen now to share the screen. There you go. Okay, sharing the screen. Give me a second. All right. Okay, I think you guys should be able to see it. This is actually the website tradingview.com. You can actually access it by TradingView. Just go to TradingView. Okay, you can open it. There you go, and you can go to the chart section over here. Okay, and the website going to bring you on to this level. Now, if you actually sign up, okay, you can actually sign up to get live data. All the data here contain the rest. I think on most of the major equity market, ETF, commodity, all the data actually available here. The difference is only that the data may be maximum up until 2012, or for certain stock up to 5 to 6 or even 10 years. And to get a live data or all the history, you have to pay. I think it should be cost about between $60 to $80 per month if you want to get live data. But nevertheless, I think for this session is enough if we just using a free version. So the free version, what you can see here is pretty much similar with everyone. If you want to open your website and take a look at the same website, also shouldn't be a problem. Now, okay, give me a second. All right, now what you see right now, I just opened Bitcoin USD. You can just search for that, Bitcoin USD. Okay, and the code, and when you get it, you can see the chart here. Now, technical is something that quite, I would say, unique. Why? It's a very simple reason. A lot of people actually trading based on three things. One, fundamental. One, technical. Another one is actually something that we call that hope analysis. Buy and hope it go up. That's pretty much normal. Now, usually for the guy who actually using fundamental, we study the background of the company, the macroeconomic condition, the forecast of the growth of the country itself, or even if you trade forex, you're looking for the data, recent data, job data, and so on. If you're trading commodity like oil, you want to see how the price is going to go. You maybe refer some data called or CFTC, looking for the data, how many people short, how many people long, and to get some sense of direction of the market. Now, fundamental, that is it. For the guy who's using technical, he actually pretty much just open the chart and trade. And the reason why I like technical so much is because there are something that we call a chart is something that we cannot lie. A chart does not lie. Fundamental somehow CEO can give a different update. Somehow the company can file what we call that not proper record of their earning and so on. But in chart is the pure and utter reflection of what you saw of what happened in the market. That means chart is the reflection of the human psychology. If everyone is bullish, okay, there is a one we call that there is one there is one what we call that something that we call greed is coming in. So when everybody start to greed, they keep buying. Price go higher, they buy and buy, and those pushing the price all the way up. So same thing. There is another angle we're looking from the fear perspective. Fear perspective, as the price coming down, people who are fear start selling, and those feed the selling pressure continue, and the price coming down. So in terms of technical, we believe whatever you see on the price right now is the reflection of the current supply and demand. In other words, is for example, I just take we're talking about US market. For example, US market Dow Jones now heading to 36,000. The thing is very bad over there. There is a protest and so on. They just the country just reopened from the COVID, and there is a lot of challenge coming in. But somehow Dow Jones is actually rising up all the way from the low of 18 or 17,000 previously. So what does it mean? So it means right now, if you recall, 3 months back, Federal Reserve has started a program they call QE. Once in the world, it called QE. The same program that started in 2008. How those actually bring out the US from the recession actually been started again recently. So recently, up until the last 2 months, Federal Reserve has spent about 2.8 trillion, okay, providing liquidity in the market. Those actually lift what we call that all the stock market. Now here lies the problem right now. There's a lot of problem in the US, but what you see in the Dow Jones right now is the current risk appetite for the current sentiment. So simple. Same thing with Malaysia. Malaysia now. Today I checked KSCI trading at 1530. Okay, if there is an opinion that Malaysia should trade much lower, why? Because the political the new government and so on, all the political side. By right, KSCI should trade about maybe 1,200, but it is not. It trade about trading about 1530. But if we want to say that KSCI very good, okay, the forecast of economic growth going to be much better and so on, it did not as well. It's still trading at 1530. So what you see on the screen right now is the reflection of the current behavior of the market. So that's why I really like the technical. So technical in the good hand, you can be what we call that it can become a very devastating tool for you or creation of wealth. Now the technical, there are good thing and the bad thing about technical. The good thing is something that very easy to learn, very easy to pick up, very easy to learn. But there are the con or the bad thing about technical is going to take time to master. So that means the only thing you need to know is actually you're going to take plenty of experience. Experience, that means you have to use it, practice it, try and error, buy, lose until when you get the gist of it, you get familiar with the trend and direction and so on. And then when you start to getting better, then the way you analyze the chart will be pretty much improved. I have spent, I think, more than 15 to almost 20,000 hours looking at chart. I work as a chartist at Maybank. My daily job is actually, just looking at chart for the last 12 years. So I think a chart something that the more we see, the more we learn, the better we get at it. And even at this current point, I don't think I really capture the essence of everything now, because the way the market move right now, there's a lot of you're talking about digital asset, you're talking about algo trading and so on. So a lot of things that need going to be happen in the future, the next year ahead. So what we need to know is actually we may want to learn some programming and so on. But beyond that, before we learn all of that, we need to know the basic. Right? And for me, technical, the most important part is always the basic. The basic is going to create your core belief, your core function, and how those actually going to develop your skill. Those core belief is going one of the key factor. Because I have trained many, I think 1,000 people. The biggest, the most question asked, Nick, which are the best indicator? Nick, which are the indicator that guarantee can make me money? So if you want to know the answer, empirically there is no indicator that work all the time. Now, you see, the market is dynamic. That means the market goes up, go down. There is a trend, uptrend, sideways, downtrend. During sideways, the market behavior is different. During uptrend, the market behavior different. Even during downtrend, the speed, the volatility, and the change of price is much more fierce. So there is a different. So in order for us to adapt, okay, with the ever-changing dynamic market, we need to know the basic. The basic, I mean, if the market goes up, trending, what should we do? Which indicator going to help us? Is it moving average? Is it RSI? So if the market trends sideways, which indicator should we? Should we opt for stochastic? Should we opt for the DMI or anything? So this is something that I want to share with you now, because there are no one indicator that going to work all the time. All right. If you heavily rely on one indicator only, or you rely purely on an indicator, thing not going to be well. All right. I have tested 100, if not 1,000 of indicator. All right. And I always come back to basic. The basic is always the best. The best, I mean, when you look at a chart, you need to look for one thing. And one thing, we call it a price structure. What is actually the price structure? Now, what you see the chart right now is the chart for Bitcoin. And for Bitcoin here, I'm going to move my mouse here. And this chart, okay, you can see the structure. What I mean structure is the price movement. The price goes up, go down, up, down, creating a series of what we call that higher high and higher low structure. This is low, another higher low, another higher low. So when you have a higher low structure combined with what we call that high, a new high, then we have an uptrend. Simple. Right? If the price remain traded at one particular level, did not exceed the previous high, something like this, then we call this a sideways market, right? And if the price is actually coming down, right, creating a lower high structure and lower low structure, then we call this a downtrend. It sounds simple. Now, here the worst part. In every uptrend, there is a downtrend. In every downtrend, there is an uptrend. And in every sideways, there is both uptrend and downtrend. Now, our job is to identify whether those during the uptrend, the downtrend, is it just a blip, a temporary, a minor pullback, or is actually going to turn into reversal? For example, let's take a look on this current chart. So what do you think? Is it uptrend or downtrend? Just look from the structure alone. This is high, lower high, we have high, and another lower high. By right, this is a downtrend. We have a low, lower low, lower low, and another lower low structure. Then this is clearly a what? A downtrend. So as for now, okay, what you see right now, this is clean cut a downtrend. But in this downtrend, you have an uptrend. Which is the uptrend? The last move since April up until recently is considered the uptrend. Now the keyword is actually looking from the uptrend, how high it can go up, how low it can go down. So as for now, what you see here, the price is reaching a certain level where if Bitcoin now trading at 9964, break above this level, 10,400 or 76, okay, they're going to create a higher low structure. When there is a higher low structure, that means the trend has changing from short-term uptrend now become a medium-term uptrend. Why? Because this level or this resistance has been taken out. Of course, when we talk about technical trend, we have to talk about the support resistance. What is actually the exact support resistance? Okay, I have one particular website that I think is going to help you a lot, particularly in learning or technical. I call it a stock chart. Okay, stockchart.com. I think you can see. Yeah, there is a plenty of technical here, plenty of the chart school. Okay, the creator of the website on the owner of the so-called website is actually John Murphy. John Murphy is in technical analysis is considered the father or the guru of technical analysis in the modern technical analysis. Why? Because he's actually combined as part of the educator. Okay, the guy who actually writing what we call that in technical we call it a Bible, called Technical Analysis for Financial Market. So those books actually going to help a lot of people, particularly who just want to start. And those books actually, if you want to buy, I think you can have it in Kinokia or you just order from Amazon. It costs about 400 or 500 ringgit. So the good thing about book is how simple his what we call that explanation. So the way he narrate the storyline, the way he teach about indicator and so on, it does actually make it life easier. For those who just started, I think that's a very good book. Now coming back to the chart here. Now how we want to identify the support resistance. Okay, now before that, what is exactly the support and resistance? Support resistance is, for me, is the level where the price unable to go up, fail to go up, and because there is a plenty of selling pressure. Now, for example, I took this level as resistance. A resistance doesn't have to be exact point. It can be a zone. A zone, that means I would like to take a zone between this level. Why? Okay, what you see the chart here is the candlestick. Candlestick chart mean the price is based on the for that, and all study in Japan is been popular by, I forgot the guy, Musashi Hauma. Is actually a Ronin, a samurai, who trade what we call that rice futures. Okay, so what he did is actually this is the price for those particular week. What I'm using is a weekly chart. That means one bar or one candlestick here contain the price for the 1 week. So that means at the bottom
Excuse me,
here.
Nick, if I can stop you for a while, there is a question. Why do support resistance level form?
What is?
How
Sorry?
do support and resistance level form?
All right, okay. Support resistance is the level when you can see rejection. Rejection mean if the price goes up certain level, all right, and unable to close higher. So that means in the candlestick, or you see here, this is we call this a shadow. So that means in order to close higher, they need to have something like this, the white candle here. So if the price able to close higher here, that means the resistance can be broken. Now, why I take this one? Okay, this is currently the previous high. This is the current level, right? Okay, so this high, you can use previous high. This level, let me, is there any drawing circle? Okay, brush can. Okay, this is the previous high. This is previous high, and previous high. Now, if you take every high that happened, that means there's a plenty of resistance now. Now we want to identify which one is significant, which one is not. So in order for you to know, you have to look for the consistency of the price rejection. That means for this one, okay, you can see one candle, okay, bearish candle, the price has been rejected with this level at 10,500, okay, roughly, because that you can see a tail here forming. And you can see here recently on our 31st October, there's another price another candle who actually tried to break this level but failed. So that means we have a 2 attempt at least now. And this candle, okay, trying to break, fail, trying to break, fail, trying to break, fail. So that means we have multiple candle here who actually failed to break this level. So we can consider this as our first and official support. Official resistance. And here
right.
you can see how the price actually try to go up, fail. There's a selling pressure coming in, okay, push the price lower. So that is first resistance. And for me, you can always look for the significant level. So that means from this level, sorry, I think, right. So this, you can take this one also, this one, or this one. So which one is significant? If you're not sure, you can create a zone. So that means as the price enter this level, if the price, let's say, create what we call a weak candle, something like this, okay, the black candle over here within this zone, follow at least 1 or 2, 3 candle, that means there is a slightly there's a lot of selling pressure. Then I think if you buy right now, go up within this level, they create a lot of the black candle here, that means it's a strong signal that you should able to sell and lock your gain. Simple as that. Right now, this
Nick, if I may ask as well, sorry, why do attempts to break through resistance usually fail? Why usually that when a price tries to move up, it unable to break the resistance? In what terms?
I would say, okay, we talk about the simple psychology here. Now, in order for you to understand, we have to look back far on the left side. On the left side, that means something that already happened before. All right, so imagine here, all right, as the price go down, okay, there are some seller. There are definitely going to be a buyer, right? And you can see here, there's a lot of price rejection here. As the price come down, rebound, price coming down, rebound, and price coming down, rebound. So that means there's plenty of the people who actually buy within this level. Agree? Okay, so
agree.
Okay, what happens is the price coming down all the way. So imagine that you buy a Bitcoin at, let's say, 13,800, okay, and then coming down all the way to 6,000. What you do? You want to sell your cut loss? Yes, you may. But for those who actually don't want to cut loss, you're going to keep it, continue to keep it, and finally, what happens when you buy something, the price coming down, and finally the price coming back to the price that you actually bought before? what the first instinct as a
I would
human
definitely
being?
sell to protect myself.
Correct. So because this happened before, so that's, you can see the rejection here. Has the reason why candlestick, the reason why technical work, because what you see here is actually the simple human behavior at work. Human behavior is very simple. All right, we have this what we call that. Richard Taylor get what we call that a Nobel Prize for the book talking about how the human behavioral finance. So that means most of the people actually reaction in the stock market or any asset class, the reaction is similar because human have the same control, same. What make different is actually have the same reaction, same psychological behavior. What make a difference between good trader, exception trader, how they control the risk. Now, what happens is right now, as the price rebound back, okay, going up within the same level, those who actually get caught before actually try to offload it. So the reason why, let's say we are going to be bullish here, okay, a lot of people think they can go higher, but instead there's still plenty of the seller here. Okay, in order to go beyond that, more buyer need to take out all the seller within the zone in order to be more bullish. As simple as that. Same thing with the
Supply and demand, right?
Correct. We're talking about normal supply and demand. So right now, as the price coming down lower, all right, and then rebound back. Why? That's simple. The guy who buy maybe at this level before miss out. Okay, I don't think I want to I don't want to
Sell, yeah. As you said, the hope analysis.
I don't want I miss out. Okay, I miss out this level, so I don't think I want to follow the price. I didn't think I just want to jump in on the moving train. So what I did, I said I'm waiting. So finally the price come down to the level that actually close enough with this what he bought before. Then what happens is just to start to buy back. So that's create what we call that additional demand coming in. That's how the demand being started. That means people who miss out before coming down the price to the level that is exactly cheap enough for them to think this is cheap already, and then that's the create what we call a demand coming in. So it's all about supply and demand. It's all about supply and demand. So now the reason why I'm using the weekly chart here, because the weekly chart we are most of the technicalists actually agree the best chart to look at to analyze the long-term trend or medium-term trend, you should be using weekly chart. Why? Simple, is there is less noise. All right, so imagine if I change to daily chart. Okay, there are more high and low here, there are much more movement over here. Imagine if I change into something much smaller time frame. Let's take a look on the 1 minute chart. It can be very messy. A minute you are bullish, a minute you are bearish, 1 minute you are sideways. So it's going to be changing, ever changing. Now a good trader will start with the bigger time frame. Biggest time frame because he want to establish the bias, bullish or bearish. At first, when you look right now, okay, for me, I think medium term, long term still pretty much bearish, but short term is definitely bullish. Now the question is, can Bitcoin beat this level? Can Bitcoin goes beyond 10,500? So this is how we use indicator that going to help us whether to foresee is there is a further upside or not. Now the indicator that I'm going to use is very simple. RSI, stochastic, and you can add more, but usually you can stick to normal RSI. Normal RSI right now is just a measurement how strong the buying interest or weak how strong the buying interest or how strong the selling pressure. It's very simple. If I can show you here my setup, how to change the screen here. Give me a moment. Where's the screen? All right. Screen share off, screen share on. Choose the screen. All right. Okay. What you can see here is my simple setup. This is my platform for analysis. I'm using it to do my work and so on. So what you see here is the setup that I have. I have plenty of setup. 1, 2, 3, 4, 5, 6, 7, or even 8. So each of the setup is going to tell me a story. So when I do this, when I put the setup here, the question is, when you use technical, you want to understand. It's something like you want to talk with the chart. I'm sorry, I kind of like a nerd, right? A nerd, I mean, the way we want to understand something, you want to know whether the stock is going up, the asset class Bitcoin or Ethereum want to go up or not, you need to understand the characteristic of the price movement. So in order to understand that more, you have to put into few setups. Few setup, I mean, you want to know how strong the momentum right now. Okay, what is the trend right now? Uptrend, downtrend, or sideways? So let me just put Bitcoin here, for example. Okay, so you're going to load all the price for Bitcoin. So what you see here now is a similar thing just now in the trading view. This is actually a weekly chart. All right, you can see the volume, and below here is the RSI. So RSI to measure is very simple. A lot of people think RSI is to use for oversold, overbought. It's wrong. RSI never intend to use for overbought or oversold. It's actually, we use it to measure whether the trend or the overall momentum is actually bullish or bearish. To know that, there is a middle line here. We call that 50 point here. Anything above 50 points, so that means the overall momentum is bullish. Anything below 50 points, the overall momentum is bearish. Overbought can be one indicator that indication that the price is going up too high. Okay, however, it does not mean it will go down. Okay, there are times when the asset class continue to be in the overbought position, but the price keep going up higher and higher and higher. So in a nutshell, occasionally overbought, some said is a sell signal, but for me, there are times that we can use that as definitely a strong buy signal. All right, but more on that later. The simple setup we use here is actually combination of moving average and Bollinger Band. So what you see here on the red color here is the normal 200-day moving average, and the black line here is a normal 50-day moving average. What is actually the average line? Average line is actually is a mathematic. I mean, you combine few level, few point, okay, the average price for certain period of time, and you put a point here. Okay, for 50, that means for last 50 days. So you put each point, average price, and you connect the dot, and they will give you the line. So in this line, the way we actually interpret is very easy. Okay, above the line bullish, below the line is bearish. So if the price trading below the line, that means there is a bearish, at least for medium term. Why medium term? Because 50 days is 2 months and a half, so we consider it as a medium term. 200 days is at is the benchmark for most of the fund manager out there, most of trader. 200 days, that means if the stock trading below 200 days moving average, that means for the whole year, the stock or the asset class is actually trading lower. So that means it definitely in the bearish trend. If the price rising above the line 200 days, that means the overall trend has turned from bearish to bullish. As simple as that. Now, what we see right now here as the Bitcoin, this is a daily chart. Okay, the charts having one particular candle here represent the price for today. For example, today price. Okay, today price open at 9519. At the moment, last traded price 9607. Today's high, it hit at a high 9646.21, and today's low at 9382. So the signal here actually in terms of the trend, all right, what is it? Is it bullish or bearish? This is actually bullish for the short term. Why? For the short term and medium term and even the long term. Because why? The Bitcoin now has been established a new high low structure. This low, higher low, higher low, higher low structure. So that means we have clean cut definitive of the uptrend. As I mentioned just now, short term is uptrend. Now it's getting better because why? Not only uptrend for short term, it's about to be an uptrend for the long term. Why? Because this Bitcoin has established a new base right above this line, the 50-day moving average. And we have a signal being generated. Signal that means if the short term time frame of moving average closing above longer term time frame or moving average, it creates what we call something called golden crossover and has the signal. So what you see right now is the buy signal, and by right, okay, the signal here is actually pointing upward. So what you see here, I don't think it's going to go up all the way. I think it's going to be sideways for a while until one candle can station breakout close above, let's say, this high. Okay, then Bitcoin is definitely going to up further and definitely going to break the previous resistance that we talked about just now. Okay, let me go back. This one. All right, this one.
Nick, sorry, Nick. Before that, there were some questions here about definition of short term, medium term, and long term.
Okay.
And as well as from Daryl, between MA and EMA, which is more reliable? Sorry,
All right.
sorry for the interruption. Yeah.
No, it's okay. Please do. Keep asking. Now, by the book, right? I'm going to use the book here by rule of thumb. Okay, anything less than 2 week is is a super short term. So short term usually been defined something that the move between 2 weeks until 2 months. Okay, and between 2 months to 6 months is medium term, and beyond 6 months it can be what we call that it can be a long term, but that general rule of thumb. However, different trader have a different definition. For example, for guy who trade forex, they are doing mostly intraday trader. That means they buy today, or they buy at 9, they sell at 10, or maybe they sell later at 4. All right, simple as that. So that's intraday trader. For intraday trader, if they buy today, sell tomorrow, that means they are medium term. They're holding for medium term already for them. Okay, short term for them, anything for a day. Or if you meet a scalper, okay, who buy and sell in the even in the few minutes, okay, for them 2 hours, 3 hours consider long term, right? So we have to define yourself how long you willing to hold something. So if you usually buy and sell, keep for 2 weeks and then you sell, maybe you consider that not that long, so you can consider as short term. Now I have met one fund manager from Oppenheimer. Oppenheimer is one of the largest asset manager in Europe. I think their asset under management is about 1 trillion euro. So we met last year during one of the conference. I asked her a question, simple question, because she want to make one company called Sunway Construction, and she want to buy and keep it for short term. So I asked her, what is your short term horizon actually? So she mentioned is short term 5 year. 5 year for her is short term. How you define
Yeah.
how you
Yeah.
define long term? Is it 30 years? Anything above 30 years is a long term. Wow, okay. So that's different. So when you mention about short term, in the safe term, I would say anything between two weeks to 2 months is definitely short term. Beyond that is medium term. Beyond 6 months is definitely the long term. Now, in terms of Bitcoin trading, I think if you really actively trading, I think you can trade. Like for example, I'm going to change it into daily chart, right? If you trade for daily chart, I think it's safe if you hold. Let's say you hold for over a week, that consider short term for you. If you hold over 2 weeks or more, that consider medium term, and if you hold more than 1 month, it become long term for you. However, if you guy who actually buy before and continue to keep for quite some time, you wait for the bottom, you wait for the price rebound from the support level, you buy and keep. So that means you are definitely considered as a long-term investor already. Long-term investor that not worry about small change in the price, that price movement on daily basis. They are looking more on the bigger picture. Okay, they are looking. So if there any potential sharp price in the Bitcoin, okay, any pullback that I want to buy, it goes up high enough, they want to sell. Simple as that. Now, within a normal simple moving average and exponential moving average, actually the way it different is actually the way it count. For simple moving average, you actually just combine an average hours for let's say 5-day period, okay, without any weightage given for the recent price. However, the way you calculate, you put more weight into recent price. So that means last 5 days, okay, in terms of weightage, instead of normal, let's say if you have 1.2 for everything for 5 days, maybe everything since the first 1 to 3 days is about 0.1, 0.1, 0.2, 0.3, 0.4 as the nearer to the we call that current date, you put more weight into that. So that's why if you put two moving average, usually you can see most of the time exponential moving average, you try to hugging the price much more closely. Let me add here. Okay, you can add here indicator. I just take a simple moving average. Okay, this is, sorry, I think this is script financial template. No, yeah, sorry, this is a template. Yeah, sorry, it have quite been some time for me to use that. Indicator here, I think this is indicator. Hold on. Should be here.
It's actually the indicator, correct?
Be in. All right. Okay. Here, moving average. Where are you? Okay, moving average, normal, and exponential. All right, this one ADX line going to delete. Okay, same thing. I'm going to change the color, will be better. Okay, for here going to use purple. Let's say make it thicker and let's see. Okay, so too close. I'm going to change it to different. Let's say we use a normal 21 day. Here we change also to 21 day. Why 21 day? 20 days okay, 21 day okay, 22 day okay. So in this case, by right, when the market's trending, okay, there are some tendency for the what we call that EMA or exponential going to help us much more what we call that closer. In this case, yeah, uptrend movement. Okay, as the price start to do sideways, okay, in this case, I think you're going to have a lot of the signal here because what we see here, despite the price close above or below moving average, is this definitely sideways because why? They keep up, they keep going up and below the moving average. So in term of the moving average itself, this is no longer be suitable to use for the short term because why? If you have one indicator that give you buy signal every day, so the only people that going to make money is your broker, which is me, which is fine by me, but for trader it's not. So if the sideways market, you shouldn't use the moving average because why? Moving average in the sideways, we calculate the average, right? So in terms of mathematics itself, calculate the average, you get the price which is going to be closing right in the middle of the price. So it doesn't give you any good signal. So in order for you to do that, you have to step away a little bit, taking a step back, going into slightly longer term. So that means maybe use 2 month and a half, 50 day normal. Okay. Okay, there you go. So you have it. So then you can see here much more clearer. Okay, in terms of EMA here, EMA closing or we can hugging the price much more closer compared to the moving average. Now, EMA also can be used by for two things. One, it can be a support and a resistance, and this is also can become your stop loss level. Let me imagine for something. You buy at 9,608, where is your cut loss level? You can put your cut loss level. That means if the price go beyond this level, that means this Bitcoin going to create a lower low structure. A lower low structure is not good. That means it's actually a start of the new downtrend moment. If you have series of lower low structure, that means it's definitely on the downtrend. So if you want to get out from the market, you want to get out of the market before the trend is changing. So this is the key point. So you can use also this one, okay, the moving average as your stop loss. That means if the price goes below this moving average, that means trend is changing from bullish now become bearish. As simple as that. You're not going to use the as exact your exact setup for your to decide whether you want to buy or sell, but you're going to use the moving average and the indicator as a tool to help you decide whether this is bullish or bearish. Okay, every indicator going to react differently. Then every indicator, the purpose is clear. They want to give you information, not let you to decide whether you want to buy or sell. You want to buy, you want to sell, you have to look purely on the price movement. Right? You want to buy, you buy at the support. Okay, you want to sell, you sell at resistance. Okay, at the support. If the price bouncing off the support, what you do? Okay, that means this support is strong, so that means you buy. Simple as that. Okay, and this line going to help you to determine whether you bullish or bearish. Now, another one thing is in terms of trading, the way we use it actually, I would say the way we interpret, you can have to imagine something. Price and volume. In this case, price is I'm going to use a simple analogy. If we going to let's say KFC, okay, Kentucky Fried Chicken. The price is the chicken itself, okay, it is chicken itself. Okay, this indicator, moving average, RSI, and other indicator is the side dishes. All right, it can be this can be the
Yeah. Sorry, Nick, I think your line is a bit off.
It can be this drink. It can be mashed potato and so on. So it's good to have that, but if it has a tool to help you to decide whether you. All right, I'm okay. Can you hear me?
I think the
Hello?
line's a bit
Testing?
breaking.
Testing.
Yeah, I can
you
hear
me?
you, Nick. I think the line's a bit breaking.
Hello, Suren, can you? Okay, is it okay now? My Maxi fiber. Apparently, the box that hold the fiber behind my house is actually broken. So the problem with the Maxi fiber is you have to call TM and get TM
Okay.
to help you out. So they
Yeah, sure.
it's a delay. So I have no internet access, high speed for 3 weeks already. So finally tomorrow they're going to come in.
Yeah,
So
no
right now,
problem. You are good now, so no worries.
I'm going. Right now, I'm using the phone and my laptop to hotspot. Now, let me continue. So, what is the other indicator that going to help you? So, let's continue with different things. So, for me, it doesn't have to put so many indicator. One thing that going to help you, you want to know is one, the trend up or down. The second is actually the momentum, and the last, it could be going to help you. You can use either trend indicator or you want to know the trend strength, how strong the trend or how weak the trend right now. Okay, so I'm going to use additional two indicator. All right, one we're going to use RSI. Okay, be in just normal RSI. Okay, sorry, this is stop. Sorry, I got it wrong. Normal RSI. Okay, and another one I'm going to use DMI. All right, okay, maximum 4. So I'm going to delete one indicator here. And then when you get more. For free account, you can only have what? 4, right, indicator?
Yeah, 4.
Yeah, 4, that's plenty already. Now, two indicators here going to help you whether to decide you want to buy or sell. Now, let's take a look again. Bitcoin, as for now, is actually bullish, right? Short-term bullish. So that means right now there's a chance for Bitcoin going to test this level. Okay, break this level, they're going to create higher high structure. So that means this short-term trend now look like to go up further. So that means right now, if you want to buy, if anything, if the price come down deep within at let's say 8,800, 8,009 and rebound again, you have nice candle here, rebound, then that's it. That's your call to go in, all right, to go buy. So right now, if you want to buy, I think you might want to wait because why? Now, let's take a look on the momentum right now. Momentum, what they're doing right now. Okay. Right now, momentum is actually at 53. So I would say it's pretty much flat. So that flat, that means there is no ability to go up, no ability to go down. So that's good thing. Good thing because why? They're going to be sideways. And what the best thing about sideways is actually something in between. Okay, bullish go sideways first before turn, actually very important part for the trading because in sideway it's going to create a setup for you, it's going to create a base for you, and those are the sideway usually where you initiate your buy position or your sell position. Simple as that. Now here next, how we use the RSI. If they maintain above 50 is bullish, below 50 is bearish. Now that's one thing. The second thing is you can use RSI as a pure price movement as well, price tracking. I mean, this is the previous low at 45.89. We just take a 46, all right, still point. That means right now, if this point, you can take as your support level. Okay, so that means even as I slip below 50, as long they did not create a lower low here, that means there's a chance for overall trend still pretty much going to go up, right? So right now, important is another interpreter using RSI is looking for something that we call a divergent. What is actually divergent? Divergent, that means if the price create a higher high structure, but the other side create a lower high structure, that means they give you signal that momentum is actually easing and expected to make a reversal pattern. So that means right now, if you want the market to go up, that means you're looking at a reversal pattern or divergent pattern. That means what? That means if the price, let's say, create a lower low structure, let's say this one break below lower structure, but instead of RSI going to break below 45, is instead going to create another higher high structure here. So that means here, despite price go down, momentum apparently is going up. So that means there's a chance for reversal going to happen. So if any indicator going to help you to give you some kind of forecast what going to foresee to happen in the future is RSI, which is going to give you a signal whether the market is going to start to reverse or not. Or for in this case, you can use purely from the momentum perspective. So as for now, momentum is flat, and I think you expect to go sideways. Now come next part, DMI. DMI is indicator where you combine three lines, and those three lines is actually going to help you to determine whether overall is bullish or bearish, right? Normal, I just use the normal 14 days, and they're going to represent by three line. So first 88 line, I'm going to change color, normal color, plus DI and minus DI. Okay, what is each of the line mean? All right, for black line here is called ADX, and ADX is actually going to tell you whether the trend is strong or not, be it bullish, be it bearish. If the price coming down and the ADX line is rising above 20 or 25, that means the trend is weak. Okay, doesn't matter it goes up or down. So we don't really care which point they're being traded right now. What we want to know is if the if the ADX line trading below 20, so that means there will be no trend, right? There will be no trend. That means turn going to be sideways. Now, in order for you to know which whether you bullish or bearish, you have to look for two lines, plus DI or minus DI. Plus DI here is actually the blue line here. Minus DI is actually the red line here. Okay. If the plus DI, or I just call it bull line, and the red line here, minus DI, I call it the bear line. I mean, if plus DI above the minus DI, so that means bull in control. Okay, bull in control. So if the red line above, so that means the bear in control. So you want to know how strong the bull, okay, you look at ADX now. So ADX now is slightly above 20, but not yet rising above 25. Okay, in general term, above 20, above 25 is a confirmation that there is a trend is happening. So that means you want to know the trend is up or down, look for the plus or minus DI, whichever at the top. Whoever control at the top, that means that's the trend. So if RS minus DI above and the ADX line is actually above 25, so that means the bear in control and the bear is strong. Okay, in this case, the bull in control, but the bull, is it strong? Not strong enough, because what? It's still at between 20. In order for bull to be strong, it need to go above 25. All right, above 25, then the bull is strong. Right now, what you see here right now, bull is strong, bear also equally strong, but then the bear start to come down and the bull start to establish a dominant over the bear above this line. So, but the problem right now, you can see here, area actually come down and slipping. So when they start coming down, that means despite bull in control, the bull actually, the power is start to lacking. Okay, the power start to step away from the bull. So that's the reason why you can see the market or the Bitcoin price movement is more on the sideways basis. So right now, if for you to look for the bullish setup, okay, imagine the price going test 8,800, rebound back, and followed by the volume. I'm not sure if the volume is Gini or not, the price, and because for Forex, the volume is depend on your broker. So sometimes you just ignore the Forex, but that's Forex lah. Right now, for RSI, is there any uptick? Okay, rising back above, let's say above 63, create a higher line structure. So that means at 65, that means the momentum start to go up again. And to confirm, you want to know this momentum is strong, the trend is strong. ADX line rising above 35, and this blue line is actually above the red line. So that's it. So you know the Bitcoin is ready to go up. Okay, that's a simple setup. All right. Is it good, guys? Is you guys okay?
Yeah. Is there any question from the floor? If there's no question from the floor, I think Jenik, you can proceed.
Okay. Ethereum. What the code again?
ETH. Ethereum.
ETH, right?
Yeah. ETH US dollar.
Yeah. No wonder. There's none. Of course. Here. There you go. Okay, let's take a look for Ethereum. Okay, the movement more or less, but this is nicer. Why? Why this price is nicer? All right. Why the price is nicer? Because this is resistant. okay, at 20, 221, 230, or anything beyond this one, 225, all right? For example, 225. Let me just draw the line here, okay? Why I say is a good price? Because resistance here has been taken out, okay, go up. So now you have a new leg. Imagine that something that's fair is imagine that you are actually climbing the stair. That means this is the first step, second step. Now you have new step already at the third step. So this third step actually building over the previous base here. So that means you have a resistance, pop, break, and then you have a new step. That means you're actually climbing further. So in terms of structure, the price consistently riding above 50-day moving average, rebound here, rebound here, rebound here. So that means this line can be your guidance, exact guidance. All right, that means if you want to buy, you can follow the trend here. As long as it did not break this trend, that means overall still bullish. Now, what happened here? You have a smart, very mild and small divergence. Okay, what you see here? Let's take a look here. What is divergence here? Here, lower high. RSI make a lower high, and here price make a higher high. So when you have this kind of divergence, a small divergence, that means there likely a pullback happening. So the pullback indeed happen a little bit. So I think right now what happened, usually when the price break new breakout, it will follow by a pullback. So those pullback usually bring price back toward this level again, previous resistance, turning support. Beyond that, then they're ready to resume to go up again. So that means right now I expecting a minor pullback to test 220, and if the rebound, it should able to continue to go up. Let's take a look on the trend here. Overall, because why? RSI in term overall is way above on the 50 level, close to 60 level. So that means in term of overall momentum is still pretty much strong. So you want to know how strong the bull? Let's take a look here. 88 line is actually trading about 22, still not above 25, and but the bull pretty much in control. So right now I expect either sideways a little bit, come down, and rebound back and continue to go up. Because why? Why I confident it go up? Because the trend here says go up. The trend structure is up. So the bias is up, and in terms of probability, is definitely on the upside. Can they? We use indicator as a guideline whether we are bullish or bearish. Can we actually be bullish and somehow pump the price can break lower? Yes, it can. Yes, it can. It can happen. But how big the chances happen right now? At the moment, slim. Okay, I will say, let's say, like, on the percentage basis, I will say 70 to 80% chances are the price likely to go up. Okay, but you know about the odds, you know about the what we call the possibility. Anything can happen. Okay, even you have a small odd something to happen, it can happen as well. So it's, I would say it depend what happening going to a market. But we as a trader, we cannot depend on luck. What we can depend is actually on the probability. We have to use the best probability for us to buy or sell. So the probability, according to probability, again, the odd right now is actually favoring on the upside. So what we should do, any pullback is the opportunity for us to buy. Simple as that. Okay, so let's take a look on the bigger time frame. Weekly chart. Weekly chart, when you put a weekly chart here, this line now no longer become 50-day moving average, but instead it become 50-week moving average. That means a year. So in terms of equivalent, it's actually equivalent similar with the 200-day moving average. All right. So in this case, you can see here, this line no longer makes sense because why? It been closing above and below for quite some time. For that means here, this is a sideways trend. Sideways trend for what? For Ethereum. And for sideways trend, in order to create the breakout for the trend, RSI need to be need to be enter into what we call overbought territory. So in this case, here, this is your resistance right now, 275. If the break this level and RSI in the overbought position, then it's a good signal that the price is actually trying to break away from the medium term or long term sideways and trying to create a new uptrend movement. Right? I will say right now, chances are if they fail to go beyond 276, 75, and likely you will enter into what we call a consolidation again. Consolidation, that means you're going to be on the sideways again. For now, if you want to buy, I think, let's say for trading idea, if you buy now, or let's say if you buy at 220, okay, your cut loss, let's say below this level, below 202, 203, okay, your cut loss about $18. All right, and your profit, okay, your target you should pay at 275 or here. So that means your risk right now is about $20, $18 to $20, and your potential gain from this level is about how much? It's about It's about 55 point.
Yeah.
So I think you're fair. You risk about 20 to get something more than 20. So it's a fair. I mean, you risk about $1 to get at least $2.5. So I think it's a fair, okay, it's a fair deal lah. So in terms of risk, it's good. In terms of the reward, is good. In term of the trading probability, trend changing from bearish to bullish. So there you go. So that's how we use technical actually to determine where we should buy. If you're long-term trader, if you buy and keep, this is going to be very helpful to determine which level should you add more. Okay, for example, Ethereum, right? Assuming that you already buy just now recently, okay, if the price going at this current level, I think there's a chance to hit this level. Not able to break, you can see multiple price going here, and they always black candle show up, did not able to break. Then what you do, okay, for the next 1 week, 2 week, not able to break, and the strength, and you can see the indicator also start coming down. And in term of the ADX line, the bear or the red line here starting to climb over and maybe try to close above the blue line here. So you know this resistance is strong. It's time to sell. And then why? Because you know if you sell now, you can always buy at a much lower level. That's the beauty of the technical. The technical is one thing they're going to help you in terms of the timing. Okay. Now, in the good hand, in the one of the few, I think I know few people in the world who are able to master. Okay, in chart we use two things. The X and the Y scale. So those scale, a lot of people can master in terms of the price movement, the forecast, how high it can go up, how low it can go up. But very few people in the world who actually can master when exact time to buy. Next week, next morning, I have met few people who are actually good at that. However, the number is very rare, very few. So I would say in terms of trading, in terms of the technical, if you're very good, you can make a forecast. Okay, you make a forecast. Okay, that's the beauty of technical. Right? And the forecast, if it hit, you can help you a lot in terms of when you're doing a long term. For example, someone asked me, Nick, what's your call for the oil this year end? How much you think the oil can go this year end? Let's say I say $60. How I can get $60? So there is certain calculation that you need to buy, but more on that later on. But as for now, the basic of the technical is actually using both support resistance and using moving average to help you to find the tone bullish or bearish, and use additional tool to decide whether the overall momentum is okay and the overall trend is strong or not. Simple as that. All right, guys. Any questions so far? Oh, we just passed 1 hour already.
Yeah, we just passed 1 hour. Correct.
Is it okay? Is it okay so far? Do you guys able to get it, or am I actually just talking right now?
Yes, we can hear you. Is there any question from the floor? It needs to be a very, very good time to ask question with Encik Nick. Encik Nick, there's a question here. Are there any tools that can compute and display upside downside probabilities at any point in time?
Sorry, again?
Are there any tools that can compute and display upside or downside probabilities at any point in time?
By right, I think there is software for that. The problem is, I think software you have to pay, and most of the people who actually doing that is actually they keep it on your and they used on your own. I think if you can develop on your own, I mean you have to do some coding. You have to learn maybe Python to get it done. As for me, I did not have that tool. I did not use it because the way I use it, I just measure from the from risk level. For example, just now the way I calculate 220 is my entry level. If anything goes wrong, I cut below 202 or maybe 200. So that means my risk is about $20. And the upside, I'm looking at previous resistance at 275 or 280. So that's my resistance level. So for that, I get the idea. My risk is about $20 and my potential reward is about from 20 to 80 is about $60. So about 1 to 3. All right. So that means that's the way you can use it. But here the most important part, right? The $20 is something that you can control. That means if it go down, you can cut, you can sell, and you lose $20. However, right? Yeah, this is the best part. However, the $60 is something that you cannot control. You don't know when it's going up. You don't know how long it's going to take to go up another $60. It may go up $40 and come down. So that's something that you cannot control. So in trading, you have to let go. You cannot control everything. You have to control what you can, which means your risk side on the potential reward. You have to let it decide by the market. If the market have some room to go, more upside to go, then let it run. Right? I think the hardest part of trading is not cut loss. The hardest part in trading actually, if the market, let's say you buy, you go down, you cut, lost $20 per lot. I think that's normal. That's normal. But the thing that going to make a lot of traders piss off is actually you buy, it goes up to 75, you saw some signals to sell, you sell. And then you have the stop profit, you make about, let's say, $45. Okay lah, happy. But then pump, they go up all the way 360, 400 and 500, and then and that going to kill Bitcoin.
Yeah, I know. It's sometimes hurting. Yeah, but it's fair to it's fair to say that using technical, if with a very easy indicators, doesn't complicate things with us. Correct? Am I fair to say that?
Yeah, correct. Yeah, technically you don't have to be complicated. You have to just make it simple as possible. But it doesn't have to stay simple. You can always explore more. You can always learn more. So you can do a back test. Here you can do a back test. You can test whether this signal is valid or not. You can do 50-day or moving average. How is there? How many chance since the last, let's say, 5 years? How many chance when the price goes above 50 days? It's going to give you how high the price will go up, and then how low price will go down when the break below the 50-day moving average. So you can do back testing, allow that. But that will come later. In the first part, when you look at the price, please look on the structure first. Please look on the higher low structure first. When you understand the structure, all right, when you understand the movement of the price itself, and that's it. Everything else is going to be easy, right?
Yeah. All right, cool. And there is a bonus question as well on this. Before that, Nick, sorry to cut you. There's a question as well on what is a good price to buy Bitcoin and Ethereum for a very long term. So I think I will say this is a very bonus question that everybody's waiting to hear, I guess.
Okay, Ripple. Let's start Ripple. Long term. Now let's take a look at the trend. What is the trend? Ripple down, right? Well, yes, I would say pretty down. Here down, our long term still down. So that means I think Ripple you can buy at much cheaper price. How low? Okay, let me do something here. This is called. Where is it go? Give me a second. Fibonacci. Where's my Fibo? Fibo is different study for you to get sense where the market will make a turn. So in this case, I would say at 17,173, 172 is a good level to go in for Ripple. For ETH, long term, now let's see now. Medium term, sideways. Any chance to create a new higher? Oh, that's good signal here. See? Okay. Now here. What you saw here, a low structure. What you see here on the momentum is slightly higher low structure. So this is a divergent, and divergent signal for a reversal. And the price, it was indeed signal. So right now, I don't think it will break right away because overall momentum still okay. This starting to pick up, but it's still pretty much sideways. So I think it's going to sideways a little bit and could test making a pullback. So in this case, I would say I'm going to draw a similar level of Fibonacci from the bottom of the candle here all the way in the recent high here. So I would say at 160, 170 is a good level to go in. With your risk is set at 100. So that means you risk about $60, which is a lot. But long term, I think Ethereum has decent chance to go up. I actually believe long term, even for Bitcoin, it should go up. Yeah, definitely go up. Let me delete this one. Okay, I believe long term, this is what going to happen. Okay, possible breakout, because I think here there's a shape of the some pattern, because they're going sideways. I think they're going to make a pullback here. I think there will be a pullback first in line, because I'm not sure how the correlation between Bitcoin and gold. Gold is already run up a lot, and at the moment I think they're going to experience some pullback. Okay, dollar also equally strong right now, so I think within 7 to 8,000 it should be good level to reaccumulate again. Okay, so that means right now I think to be this level 7,000 is a good level to buy more, and beyond that, if they're able to break up above 10,000, I think the prospect at least between this high to this high, so that means we are talking about 13,900 all the way to here 7,000, it should be between close to 6,000 movement. So I add up here 10,000, so at least 16,000. I'm looking at 16,000 target if they break 10,000 level. So if you can able to buy within 7,000, I think there's a chance you can double up your money between that. How long? That's the different story. That's a very hard to measure. Target easy, time different. And time, if you want to know more, you have to pay already. Even for me, I'm still learning about the nature of the time, because there's a lot of the study need to be done, as it's not easy. A lot of mathematics, a lot of that is easy. We thought technical supposed to be simple. It's not. It can look simple, but when you go further down into rabbit hole, it's not. It's going to be very messy. It's going to be very challenging afterward. But it's a good thing you start, because why? You get hooked in that, when you make money from that, and then you're going to hook you up forever. Simple as that.
Definitely. Yep. There is a very good sharing on technical and some good indicators to look at. Any questions from the floor? So I think this is a very interactive session. Even there is a price prediction as well on where to look at Ethereum, Ripple, and Bitcoin. If there's any question from the floor, I'll be very, very positive that at least we know that you guys understand what is this technical charting all about and how do we implement it. So, yep, feel free to ask. Encik Nick is here.
If I get it right, remember, to belanja mi makan next time, all right?
Yeah, definitely. I think we have quite a good number of audience in here. Yep, a big buffet is ready for you, Mr. Nick.
I'm definitely going to order Wagyu already. If you double your money. However, if I get it wrong, never ever find me, all right?
All right. Any question from the floor?
Anything I can help you?
Yes, Mr. Nick can help you.
Don't worry. I think Suren is a very good host. I'm looking forward to work together again. If there is any invitation more on, if I have a time at the time, not that busy, I'm going to come and share more about technical, because this is the first part. There is the more to come later. If you can see my setup, there are plenty of setup here. Let me reshare my screen now. Oops, no.
Yeah, no problem.
All right. This is one of the setup that I learned from the famous forex guru Omar Ali. Is actually involved a combination of Bollinger Band and moving average. So what you do is you buy when the price going inside this range, and you sell when the price inside this range. So look simple, but you have a lot of people become millionaire already, particularly using this trading system. So some of his students actually using this system to buy Bitcoin and also trading on the Ethereum and so on. But mostly, most of the students focus on forex and also gold. I'm more focused on gold price movement, occasionally oil and few other things. Yeah. But as for now, this is one of trading system, a simple system. Others, there are plenty more. If you want to look much more complex, there are long-term forecasts using study the crisis study, correlation between the fear index against the what we call that S&P index. We have B trend indicator here, tracking the small cycle, looking for how high the cycle can go up, and how we want to know whether this current trend is ended or not. You can a lot of thing combination. So there are plenty of things that you can be done, particularly of the in terms of the technical. So there are plenty things that can be explored. So I wish you good luck, all the best. Okay, if you have any question, you can pass over to Suren. Suren can share with me. I be more than happy to help.
Yeah.
Yeah, your
Before that, Mr. Nick, there's one question here, which is the volume profile indicator relevant?
volume profile or market profile.
Yeah, Mr. Daryl, I think what he meant is the market volume profile.
Market.
Sorry, volume profile. Volume profile.
Volume is depend. Volume, I will say depend on the asset class. For example, if you trade gold futures or if you trade crude oil commodity futures, volume is quite important. Same thing with CPO, palm oil. But if you trade something like forex, I think that's no longer become relevant because forex is OTC market, and anything OTC, the volume going to be different. I'm not sure whether this Bitcoin USD is it OTC, or what I know is Bitcoin is actually there is a Bitcoin futures traded at CME, right? Am I right? Right.
Correct.
Yes.
You're right. You're right, Nick.
This one is actually a spot, right? Combined with the multi price contributor, right?
Yeah, those are the futures. But for those like digital asset, we do have several exchanges providing
because
opportunity to So different exchanges have different volume profile. Correct.
Because of that, I don't think it's become more relevant. So I think you have to focus on the price action itself, the change of the shape of the candle, the change the structure, how fast the volatility, the how should I mention, the speed of change of certain candle that going to tell you whether there is momentum or not. I think you can use that as your main factor rather than volume, because at the time, because multiple action, I don't think volume become much more valuable because it can be high here, it can be low over there. Simple.
Correct. I hope we are able to answer your question, Daryl. So it's a very good session tonight. Thank you again, Mr. Nick. I'm sure our audience have learned pretty much a bit on how to be I will call it an expert trader. So I hope we are able to see you guys implementing it in our trading volume. All right. So pretty much good session. So see you guys again next week for another chapter of technical indicators or probably technical charts. If you guys have any question, as what Nick said, feel free to let us know. You can reach us out through our social media or probably email us, and we will definitely throw the question to Mr. Nick, and we will try to create another session with him. So cool. Thank you again, guys. Without you guys, this is not we are not able to host such a webinar session, and we also like to take this opportunity to thank you, Mr. Nick, for this wonderful opportunity sharing session with us. So anything to add on, Mr. Nick?
For me, it's simple. If you make money from trading, from Bitcoin, anything, just keep some, just put aside something, small figures on, give back to other people, be it charity or anything, just helping out the other. So you have been blessed with the knowledge to make money, outside your profession, trading, in the different asset class, you make money out that. Those money do help other people outside. That's all.
Yep.
Thank you.
That is a very good note over there, Mr. Nick. So guys, thank you so much. See you guys on the trading platform. Hope to see you guys start trading again. All right. Good luck with your investment strategy. What Mr. Nick have shared with us today. Hope you guys can implement it. Good luck. Good night, and see you guys again next week. Adios, and all the best on your trading opportunity. Cheers, guys. Right. Thank you, Mr. Nick. Good night.